What you see? Not really.
Well, it's 2 minutes after the hour, so why don't we get moving here? And just, I want to welcome everyone. Thank you very much for being part of this program. We initially had about 50 people that signed up. I see one conference room that's got a lot of people in it. I'm Jonathan Salk. I'm CORFAC CEO, along with your CORFAC staff, Jennifer Norbert and Diane Harris. And I'm sure you know this, but CORFAC provides these type of sessions at least once a month at no cost to our members. And I would just say, if you have suggestions on future programs, please let us know. We try to come up with things that are timely and different. So our next program will be next month on July 15th. It's called Art of the Tour, something a little different. And our Next Gen group actually sponsors that program and other programs throughout the year. You just heard Tom ask about Amsterdam. For those of you who don't know, that's where our fall summit will be in the middle of September. It'll be a dynamic program. We'll do some tours of the market, deal-making program, AI session, economists, best practices, networking, etc. But I think the thing that's really unique to this, besides being in Amsterdam, is we're going to have people from all over the world. So it'll give you an opportunity to meet people that you probably haven't met. So if you can make it, we'd love to see you there.
Yeah.
Our spring 2026 conference will be in New Orleans. We're excited about that. We were there about 10 years ago, and it was a wonderful location and conference. So now I'm going to introduce Tom, who is with Oakline Studios in St. Louis. He's going to moderate this program today. Oakline is part of our CORFAC affiliate in St. Louis, Intellica. And to all of you on the program, thank you very much for being part of this, not only part of this program, but just the network in general. Tom.
Great. Thanks, Jonathan. I just want to express my sincere appreciation for being a part of this. I got affiliated with CORFAC about 3 years ago at one of the spring conferences. I believe it was the one in Florida. And instantly, when I went into that room with all the CORFAC members, I felt something very, very special. Just the sense of camaraderie, true support for one another, how brokers from around different parts of the country, in fact, different parts of the world, could get in a room together with the sincere desire to support and help one another. Truly unique and something very special. So it's been Oakline's privilege really to be a sponsor of CORFAC for the last 3 years. We are looking forward to being in Amsterdam and New Orleans at the next couple of conferences. So if I haven't seen you at a past conference, I hope to see you at a future one. I'd like to make a special thanks to Jennifer, Jonathan, and Diane for just being this is my first conference with them, my first discussion panel, and just the amount of work that they put on behind the scenes to make things happen. So sincere appreciation to the three of you for making this happen. So I am an architect in St. Louis, Missouri. Our firm has an office here in St. Louis and in Charlotte, North Carolina. I've been a licensed architect for 35 years, licensed in all 50 states and the District of Columbia. And we do work all over the United States. Part of that is just the different verticals that we operate in. We do a lot of financials for banks and credit unions. Some of those are national banks that build branches and headquarters throughout the United States. We do a lot of QSR and franchise work. We've done 500 Bojangles fried chicken restaurants. We do car washes and oil change, donut shops, all kinds of franchise work. And they tend to take us all over the globe as well. We do a bit of industrial work, which has been very hot in different pockets. You may have heard Molly and I chatting a little bit earlier about what is relevant topics throughout the United States, and industrial manufacturing continues to be strong for us. And then also we do a bit of office remodel and adaptive reuse. And I say those together because a lot of office building work has kind of flipped into adaptive reuse projects here lately. So that's a little bit about me, about Oakline Studio. I'd like to get things rolling with introductions. We'll start with Molly, and then we'll go to Philip and John. And then right after they make brief introductions of themselves and their market focus, we'll get into some questions and get the dialogue started. So with that, Molly, could I ask you to introduce yourself, please?
Sure. Thanks, Tom.
Sure.
Good morning. I'm Molly Carson. I am with Ryan Companies. We are a family-owned private developer and contractor, 17 offices nationwide. We've built and developed in almost every state. My focus with Ryan is I reside in their Southwest office and I oversee our development activities for the Western U.S. Yeah,
Great.
happy to be here.
Great. Thanks, Molly. Philip, would you mind introducing yourself?
Yeah, my name is Philip Dunning, and appreciate the invite of being on this event today. I'm with Panattoni Development, an industrial developer, privately held. I'm the local partner for the Las Vegas market. We have offices across the U.S., Canada, Mexico, UK, Europe, India, and Saudi Arabia. And as I mentioned, my focus really is from start to finish development projects in the Las Vegas market.
Right. Great. Thanks, Philip. John, would you mind introducing yourself?
Sure, thanks. John Picchiotti with Dermody, SVP of National Leasing. I'm out of Chicago. Dermody is a privately owned real estate development and management firm. We specialize in acquisition, development, and management of logistics real estate in strategic locations throughout the U.S. So we're founded in 1960. Since that time, we've developed about 110 million square feet or acquired such. Our focus, it's laser focus on best-in-class assets in hard to find locations. Air is really dry here in Chicago. Dermody currently has about 8 billion square feet of assets under management. Thanks.
That's great. Okay, thanks, John. Two last things for housekeeping, and then we'll get into the first question, which will be just a snapshot of the development and leasing macro trends. We have three panelists from three different parts of the country, so this, I think, will be very interesting. And we'll start to see similarities and differences geographically throughout the United States. But the two things I'd like to make clear is we're going to try to save about 10 minutes at the end for open Q&A. So if you have any questions and you want to save them to the end, we'll try to preserve that 10 minutes. Along the way, there is a chat box. Feel free to put in a comment or a question, and someone at CORFAC will monitor those questions, and we'll raise those as quickly as we can to add to the conversation. So with that, Molly, I'm going to start off with you first again. If you could just kind of do a little bit of a deeper dive into development trends and the sort of what you see in the Phoenix market and the other markets that you serve in terms of current trends.
Sure, thank you. So, yep, I do sit in our Phoenix market, so a lot of that will focus on that area. Ryan nationally develops in a few different sectors: industrial, office, retail, mission critical, and multifamily are our largest. So nationwide, well, fair is not equal, right? And I think that will continue on probably for the rest of all of our careers. The recovery or continual success of industrial continues nationwide for us. When we're in the Midwest, it is a lot of build-to-suit and custom buildings, whereas in the Smile, our spec industrial, Tampa, the Florida area, Kansas City, this in the Southwest, Vegas, the Phoenix metro area, spec industrial has been pretty phenomenal for the last several years. Right now, this year has been funny for a couple of reasons. Maybe the T word has something to do with that. And we still see manufacturing pumping up right now. I think the stat I heard was probably about 18% of the industrial, including cold storage, speculative, and build-to-suit. About 18% was manufacturing. They what I have consistently heard is we'll see that bump up to about 25% of in the US, our work from a development and construction standpoint. Let's hope it's that real difficult high dollar manufacturing, because not all manufacturing is created equal. From a multifamily standpoint, we are seeing our Southeast office. I don't think they knew there was a slowdown from a multifamily standpoint. That has remained quite steady. Southwest, right now, we are looking at acquiring several pieces of land for that ramp up. We're expecting things to be much better. Hope is certainly a strategy sometime. And so now really is time to dig the well from our standpoint from a multifamily. Mission critical has been very popular. The search for power nationwide, what we've seen has been pretty insatiable. Where we are developing from a mission critical standpoint heavily resides in the Midwest, a little bit in the Southeast, but right now we are under construction with one of our first mission critical projects here in Phoenix in probably about 15 years, which is pretty telling.
Yeah, right. One of the things that perked my ears up, Molly, you were talking about manufacturing. One of our big clients here at Oakline Studio was doing warehousing in Laredo, and they had several sites and getting ready to cut loose hundreds of thousands of square feet of really storage space in Laredo from product that was coming across the border from Mexico, 30,000 trucks a day into Port Laredo. And right about the time of the election, and then into the new year, that strategy has pivoted. They have now shifted their thinking that now the significant developments will be manufacturing, and those will be located along transportation routes within the United States. And so there's a bit of a rethink that we see with our clients. And so I found that very interesting. So appreciate that. So Philip, would you mind just touching a little bit on what you see as the trends in your particular market or the markets that you serve?
Yeah, so I'll talk mostly about the Las Vegas market. We're 180 million square feet. Today, we're running about a 10%, like a 9.8 to 10% vacancy. And normally that'd be really scary, and we'd be in a recession if we talked about those levels of vacancy in this market. It was all driven by, I would say, some people call us the greedy developers and industrial, all getting a little excited about developing everything and anything and everything in the Las Vegas market. So we had the largest supply come online in our history. We still continue to absorb. That absorption has slowed significantly. And I would say most recently, since the Liberation Day, that caused quite a disruption in our market. And since then, we've slowly seen tenants coming back to the market, touring again. We have a lot of activity on all our larger spaces. Beginning of the year, it's like Q4 last year, Q1 this year, small spaces, sub 50,000 square feet was the hot size range. Now I would say north of 200 is the hot commodity in our market, and we're going to start seeing some of these leases signed and absorption happen, and you're going to see in short order that some of us greedy developers will be back out looking for land, trying to get ahead of the next curve, right? We've had essentially delivered all of this product. Developers have not been able to start anything new and with the entitlement process, the whole design and development timeline, we're going to be in a period of 18 months where there won't be much product or any more product coming to the market. So we're going to be back into an interesting time. I would say most of the tenants that we're seeing in the market are national or international clients. It's not just local expansion. These are expansions or logistical right sizing for these tenants. Speak a little bit about the border strategy. I've spent a lot of time working in our Yuma, El Paso, and Laredo market, and talk about that on a trend level. I would say that as the tariff started to ramp up, we saw a significant impact in manufacturing start to locate or tour the U.S. for manufacturing. You could take Foxconn as an example. They manufacture in Mexico and distribute it throughout through El Paso to the U.S. and in several locations are like that. So we're starting to see these, or started to see these manufacturers look in these other markets, and Laredo is the same thing. That I think is going to subside, and we're going to be back to a pure distribution market in that border region, and I think that trend will continue. I would say for Panattoni, we have an emerging data center team that has found a lot of success, in Ohio and Texas. It's going to be impressive to watch this new market come to fruition all across the country. And then we've seen with one of our biggest clients, the national online e-commerce client, they're back into expansion mode, not quite like they were previously, but they're still plugging along and developing, and I think that's a great sign for our market and growth across the U.S. So I'll leave it at that.
Yeah, hey Phil, thank you. You mentioned a little bit about the possible reshift or shift back in Laredo. Obviously, that would be, in your opinion, would that be policy driven? Is that just the pendulum swinging back a little bit, or what do you think is the cause of that?
I think Laredo is kind of experienced the same thing we did in other markets, right? You had every developer decide to buy land and bring a building to the market. So now there's some vacancy. There's a pretty big pipeline. And then you mentioned it earlier, the Mexican election, presidential election, that was impactful, right? And then you had judicial reform there that was on top of Claudia Sheinbaum's list of things to accomplish right out of the gate. And then we had the U.S. presidential election, and then often the tariff conversation. So all of those things are now starting to settle down, and we're starting to have a playbook of how to proceed moving forward. And with that, I think as long as Mexico can achieve the power distribution that they need, manufacturing will continue to grow in Mexico.
Yeah, great. Thanks, Phil. Okay, John, would you mind sort of unpacking your market or your markets, as it were, for us?
Sure, I'll give a national perspective from what I see. I sit on a lot of different leasing calls around the country. And one of the trends, in addition to the trends that were shared before, is we indeed are seeing the number of tenants that are in the market has remained high. However, they just haven't made decisions. I think over the earlier part of the year, with all the things that we've discussed going on, a lot of the decisions have been slowed down or put on hold. But right now, I could say anecdotally, we're seeing we have about 10 million square feet of different size spaces around the country available, newer distribution space, and about 25% of that has very strong activity and leasing action. So all of a sudden, there's been a little bit of an acceleration of the timelines. So we're starting to see the tenants get back into the game right now. So it'll be interesting to see the rest of the year. I've gone to a lot of different summits and conferences over the last year, and the different brokerage firms around the country are thinking that, we're at the turning point, and that going forward, we should start to see a bump in activity. That being said, so Dermody just closed. We just purchased a 1.2 million square foot building just south of Stockton in Lathrop, California. And we're underway on a 460,000 square foot distribution center in Romeoville, Illinois, which is in the I-55 corridor, right outside of Chicago. So we're still bullish, and we talked about the trends with e-commerce, and that continues to grow. So we're bullish on the direction of industrial.
All right, awesome. Oh, thanks, John. The next question we'll move on to is really, we'll start with Molly again here in just a minute, and it'll just touch on a little bit each individual's relationship with CORFAC and how they've leveraged that relationship with CORFAC in a recent business deal. One of the things that comes to mind for me as an architect, I had done banks and credit unions for 20 years, and credit unions were typically small financials that were very community-based, very local, 1, 2, maybe 6 branches, and could not really compete with the big guys, the Chase, the Bank of America, Wells Fargo. My son was going to college in Boulder, Colorado, and he had a Wells Fargo account. We don't have a Wells Fargo bank. We didn't at the time in St. Louis. He had a small credit union, Elevations Credit Union at the student center at the University of Boulder. And occasionally there was some money that transferred between my son and I can tell you what direction that money had to travel. And I couldn't deposit that money into his Wells Fargo account. I had to deposit it into his credit union account. So I went to a credit union here in St. Louis, and they said, look, no problem. They only had 3 branches, and it was not Elevations. They said, not a problem. We belong to the co-op. It's a shared branch network. And as sure as you will deposit that money in this branch today, it will show up in your son's account instantly, as if you deposit it into his account. And I thought it was just a powerful thing. I had at that point had done credit unions for 10 years. They just did not promote that leverage. And it really put them on par with the biggest of banks, because as long as you belong to this co-op, you had a branch at your disposal. And when I got affiliated with co-op about 3 years ago, that memory came right back. There's members big and small within CORFAC, and as long as you're connected through this network, I think you've got the power of the big guys. And as we've already heard, a lot of business today is not just done in our own neighborhoods. It's done throughout the United States and globally. And I think to be successful at scale, these relationships are going to become more and more powerful. So with that, I'll pose the next question to you, Molly, and that is, can you tell us a recent story about a CORFAC deal that you had?
Yeah. So Tom, when we were on the call and this question came up, I'm embarrassed to say that Ryan, I reached out to our developers, and I do not think we have done a deal with any CORFAC members. And I thought, well, I shouldn't be on this panel. And then I thought, no, this is my shameless plug to all of you, that we operate in a hell of a lot of places that you are, and it is our miss and our opportunity. I have 56 developers that would love to meet with any of you and talk about potential opportunities in the market. It is, I don't think it's often where Ryan is in this position, and find ourselves flat-footed on this, and I'm pretty excited about it, because I think there's a lot of good people on our side, and the research I've done on your group was pretty phenomenal. So we look forward to connecting with you, hopefully in all 17 of our offices nationwide.
That's great, Molly. One of the things, just the power of connection, I'll share a story. Dan Dokovic, who owns Intellica Commercial Real Estate and is a member of CORFAC. One of our recent deals that we were hired on as the architect was a deal that came through CORFAC. So we're very strong in the St. Louis market, as you would expect. But this deal was brought to Intellica through a CORFAC relationship. And it's going to be a tremendous project for Intellica and for Oakline Studio. So the magic is right behind the curtain, Molly, and
Absolutely.
come to Amsterdam, and we'll introduce you to all these fine deal makers. So,
Yeah.
Philip, can you share a story maybe about a CORFAC deal?
Yeah, absolutely. And a big shout out to the Dixon guys and gals in the Reno market. Joel brought a deal to us, and I will tell you that I'm not intimately familiar with this project, but on the periphery, watch this thing come to fruition from its inception all the way through its disposition. So a site we call Ingenuity, 420 Ingenuity Avenue in Sparks. Sparks, for those that don't know, is Greater Reno MSA. Most people wouldn't know if you're in Reno or in Sparks is if we drove through the city. So just know it's part of the Reno market. It was a site. I mean, this is what we really tout to our brokers that we deal with. Bring us a site, let us site plan it, and you'll get the acquisition side of the land. Then you'll get the leasing assignment, and then eventually at disposition, we'll get an opportunity to make a fee on the disposition. So Joel and his team did a phenomenal job for us up there in Ingenuity, and really can't say enough. I'd also say that Jared Katz and Chaim here at MDL Group in Las Vegas, I've known Jared for a very long time, and actually worked at MDL Group before they were CORFAC. And one of the things that I like about that relationship with brokers in my market like Jared is we can have a real conversation. So he can bring me a site, and I'll be candid with him and honest, and he'll do the same to me. And I know that I can trust what he's telling me is the truth. One, because I've known him for so long, and he's just got a lot of integrity. So, it's bring us a site and let us do the work. I think Joel would say the same thing, that bring us a site is how it starts.
Yeah. And obviously trust is important in the business. I mean, you don't want to start a deal with somebody that you don't feel that you can end that deal with them. And so that upfront trust is really everything.
Yeah, so, absolutely.
Right. John, would you mind sharing with us a deal that happened through CORFAC?
I would, but I feel like the guy who wore a blue leisure suit to a wedding, and Phil had the same suit on as I do, because my story was about DCG. So, but obviously they're doing something great in Reno, and I've also done a lot of work with Darwin Payne Wetzel out of Chicago, and I think the story is transferable to everybody on this call in the things that were important for us in the development that we did with DCG. This was in Reno. DCG brought us a 26.5-acre site in 2019 in Reno, Nevada. The land was zone industrial. It sat vacant for a while, but because we had good standing and a good relationship with DCG, we did get the development. We got the land site. We built 800,000 square feet across the street from this site. But so we were the likely candidate, and both DCG, the landowner, knew of us, and they had confidence that we can get the work done. But DCG was extremely important in helping us get the entitlements, getting the approvals for the two buildings because of the relationships that they had locally, which is really important for any developer in any market to have just that local knowledge and the local involvement. Even though DCG is a local group, they have great resources and teams within their organization. early on, they proved extremely valuable in providing needed market information just to help the Dermody team secure the needed approvals, including testimony at neighborhood and city meetings. That is the type of service that only a local broker and a local firm can provide to help a developer get things over the goal line. Also, DCG is one of the top firms in Nevada and Northern Nevada, and whether it's handling large bay or small bay products, they have a three-member team with over 40 years of experience that helped us out. So again, the team has been on hand for all of our leasing calls, all of our marketing calls. This helped us in the negotiation of the tenant that we put in place. And again, today they've been involved in every aspect of this, of this project. So hats off to DCG.
Yeah, great. Thanks, John. One of the things that became apparent as we were setting up for today was just how important it is to deal with a qualified team on the other end, whether it's being SIOR, experience in that market, to be able to know that the team on the other end of that transaction is qualified, somebody that you can trust, that won't drop the ball. We then asked the question amongst the CORFAC leadership, how many people within CORFAC, how many brokers have SIOR or other qualifications? And the number was tremendously high. It is a qualified group of folks, and I think kind of sets up our last discussion point here before we kind of go through the panelists again and then move on to questions. But it's really what would you look for in a CORFAC member? What kind of qualifications are you looking for? And really, I think, Molly, I'm going to put you on the spot again first, even though you kind of came clean with not having done a CORFAC deal yet. You're the best one to ask. As you look out across the landscape in making that next deal and knowing what you know about the CORFAC network, what would you look for in a business partner to make that alignment?
Yeah. Thank you. You've heard the theme, bring us a site, bring us an opportunity. I'm sure that is not new to hearing you. That is the best way to get engaged and to start with the developer. That is our favorite, right? Land and deals. And we would love to engage at any level with that. Now, saying that, if you're all as spectacular as you sound, you're going to want to vet a developer and make sure, number one, they're qualified. Number two, they have the same end goals and moral compass as you. Number three, they'll deliver on what they say. And so that mutual trust, the respect that we all work so hard, right? Decades-long relationships, and your reputation is all you have. So I am looking for someone, we are looking for people that really hold that dear to them and will continue to challenge us to be the best partner as well. I find that a healthy tension, bringing the knowledge, pushing us. I've had many brokers come and say, hey, I think this product you may want to tweak a little. And with that, with the tension that a good team brings, you get a better product. I know you do. So the land opportunity, ideal opportunity, that's the best way. And I can promise you, we won't let you down.
So land site opportunity, can you tell us a little bit about funding? What's the supply of capital for development? Is there an issue there for you? Or is it really more about just the site, the opportunity, and the money will follow? Can you give us a little snapshot there?
The proverbial, and everyone knows, good deals will get funded, period. We have maybe a 20-person capital market team internal with Ryan that helps, turns about I don't know, I think we've generated 4 billion in deals in the last couple of years, and we put in probably about we will turn over about 3 billion in revenue every year through our construction, development, acquisition, bank loans, high family net worth funds that we have. Our lender relationships are really strong. With that, a good deal. I have not seen a good deal, a well-located deal, a deal with strong returns. And I'm not talking 300 basis point return. I think 150 basis points for most of our products right now absolutely can get funded, and the well-located deals. So
Yeah.
I would challenge you with that.
Does Ryan get involved in any retail development? I didn't pick up on
Yes.
if you do.
Yeah,
Okay.
so we are everything from our favorite internet retailer to a ground lease with CVS or Walgreens. We have when power centers were pretty sexy. We did a number of those. We have worked with Target since their second store. We built their
Oh,
second store in 1965, and have built everything from their headquarters to their mission critical projects. So retailers, when I say that, when we work with great companies like Chick-fil-A, it is not just on their distribution or their cold storage. So
Yeah.
yes.
Great. Well, thanks. I took you down a little bit of a rabbit hole there, but thanks for handling the question on finances. I'm going to pivot to Philip. Same question. When you're looking for that partner, across the deal landscape, and I know this could be different for you in the different markets and products that you serve, but what are you looking for in that relationship?
Yeah, so recently, Jonathan and I sat down and had a lengthy discussion about this topic, specifically of how best to support each other in being successful. And really, it's going to boil down to a couple of things. One is going to be market intel, right? So if you bring me a site and we come up with a site plan, we will work together with our brokers to help come up with the best business plan for that, whether it's small bay, mid bay, large distribution. We'll get feedback from that broker, and we'll take that forward. Very next thing I'm going to ask for are going to be comps, right? I need land comps, leasing comps, and investment sale comps. And the faster, more accurate that comp set is, and even the competitive set market in the market, those are going to help us both be successful, right? We have strong relationships with institutional capital partners. Our biggest being CalSTRS. We need to be able to have that information for our packages, and then be able to talk about designation and qualifications. If a broker is an SIOR, that goes a long way with our capital partners. We have to make a suggestion, and like with Joel's team, that's easy. They all have, or most of them have, some sort of designation, whether it be SIOR or CCIM. I'm also a CCIM designee, and that just adds some strength to the team. And by having that information quickly, accurately, it shows that we have the right team, right? That is imperative for us to move forward.
Yeah.
So that's important to me.
So Molly made the quote, I wrote it down here, good deals will get funded. Is that sort of the bottom line? The money's there if it's a good deal, basically. Is that what you're seeing?
Yeah, I think, if it's we all have different opinions. I actually did a panel recently where someone asked me the other day, how can one developer pay $12 a square foot and another developer pay $22 a square foot for the same piece of land, and how the underwriting's done? one, we, like Molly and John, our company has a tremendous amount of experience in the market. And we understand the actual costs involved in developing a project. So once we get to a project that, using the investment sale comps, is our exit cap, we can come up with a, desired development spread is what we call it. So the yield on cost compared to the exit cap is our development spread. And as long as that development spread meets our requirements, somewhere, would be great if we got 150 on an industrial deal. We'd probably do 125 on industrial deals today. Most of our capital partners will be competing for that, not just one, but we have a whole stable of them, and even some private investors that are interested in deals like that. So absolutely no issue getting funding. There's a lot of money on the sideline waiting to get deployed. All these pension funds have, and separate accounts, all have a tremendous amount of money waiting for that right deal.
Got it.
Right. And it probably is a little bit different to everybody in different markets. So whether it's Phoenix, Reno, Northern California, Southern California, Texas, those deals are all a little bit different, right? That exit cap is going to affect that and the market risk as well. So,
Got it. Great. Well, that's sort of the same punchline. Good deals will get funded. I could see
absolutely.
us all walking around Amsterdam with the t-shirts now, So, hey, John, to you then, as you look across the deal landscape, what do you look for in that CORFAC partner when you make that selection?
As I was sitting here jotting notes down, I wrote three things: trust, opportunity, and experience, and it comes out to the acrostic TOE. So we're looking for the proverbial toe. I think trust has been said many times is critical. That's why I think Molly was talking about bringing opportunities. That's how you get to know a developer, an owner, or a partner. Trust are table stakes for this game because of the size of the transactions that we're in the middle of. So, and we know a lot of the folks on this call, obviously DCG, but Darwin did a deal with George Sabula. It seems like a lifetime ago, but some of these deals get dicey. But George and our company at the time, we were honorable, faithful, did what had to get done to get the deal done. So trust, the opportunity is critical. I think that's a great way to build relationships with developers, with owners. We would hope and expect that our partners, our broker partners, would be experienced, that they'd have the tools to market the property, that they'd know the comps, that they would know all the other brokers. And we talked about SIOR and CORFAC, that they would also have a network where they could reach out to other folks if they needed help or to find new users and tenants. I will say I was looking at the commissions that we've paid over the last 8 years. About 1 in 10 of our commission dollars went to the local independent companies, which is a lot given the size of the brokerage world. And it just speaks to the importance of that local market knowledge and the opportunities that come with that. And then finally, the experience to execute is also important, especially if we're looking at 800,000 or 300,000 or 100,000 square foot project. So that's good. And I think of George Sabula years ago, when he was talking about experience, there was someone that worked for him, and he pointed to the person. He said, I taught him everything he knows. He said, I didn't teach him everything I know, but I taught him everything he knows. So that's all I got.
That's a good one. We're going to wrap up here in a couple of minutes to get on to Q&A. But before we do, John, Philip made a comment about, the money. There's plenty of money on the sidelines. It just takes a good deal. Would you second that emotion, or what's your feeling in terms of getting deals funded today?
Yeah, I think all the things that have been said are right on the money, no pun intended. But it's also important to have those relationships with lenders. And as I talked about, we've performed over the years, and we do very, very stringent due diligence, and all of our underwriting and even our presentations of our potential projects are well thought out. So we we give our lenders a chance to give us an easy yes. But
Right. Right. Okay. Well, I'm going to wrap this part of our session up. We're going to move on to Q&A in a minute. I just want to thank our panelists again. It's been a pleasure to get to know the three of them a little bit better. We had a couple of setup calls. We had a little live chat this morning. It's just great. I just really appreciate deepening that relationship with the three of you. I look forward to seeing you at future CORFAC events in the future. As an architect, I can say what a gift your industry has with organizations like this. We architects don't have anything like this. I'm afraid to walk into a room full of architects sometimes because we all want the same thing. We don't have that network necessarily that helps us support one another. So I think this is a tremendous, tremendous opportunity to be a part of something bigger and more powerful. And as deals become less localized, more global, certainly throughout the United States and even throughout the world, you're going to need the strength of a network like this to survive and succeed in this marketplace. So I'm more excited than ever to be a sponsor of CORFAC. And so with that, I'm going to, Jennifer, I don't know if you want to, if there's any questions that have popped up, or if we want to open this up to our audience for any kind of questions.
We just got a question in the chat
Okay.
from Chris. Have you ever received pushback from your capital partners or non-local stakeholders on retaining an independent brokerage versus a national firm to market a development for you? How have you overcome that with your capital partners and other stakeholders?
I
Good question.
can answer that because I have direct, very specific instance in that. It's going to sound a little funny. A local broker brought me a really nice piece of dirt that was off market. And while that broker was able to secure the acquisition fee for that, we weren't able to give them the leasing assignment. And mostly because it was, and that brokerage team was more focused on investments and not specialized, wasn't part of the network. So we ended up going with another firm for the balance of the assignment. To make matters worse, it was my wife. And so it was a little bit tougher conversation to tell her she wasn't going to get the full assignment. And I still hear it today. I mean, it turned out to be a beautiful project. But that's the case. And what I would say about the CORFAC network, that changes that dynamic, right? The SIOR designation and your network changes that. Although she is an SIOR, she was not able to get that assignment because she just didn't have the industrial leasing team within her firm or her own experience. So that's when we get pushed back.
And I worked for a large independent firm in Chicago, and I also worked for a large global firm in Chicago. I led their brokerage business, and I would say that some of the large brokerages that you're all aware of are usually seen as a safe bet, by some investment managers. However, the local teams that have listings and with institutional quality owners, just, they need to be good. They need to have all the things locally and the skills that the large companies do. But I think a local brokerage brings something else to the table, and that's sometimes a real deep knowledge of the local markets. So some of your big global firms may not penetrate the markets as deeply as you all may know. So you may know street corners and every price of land and every owner. So I think play to your advantage, but also understand what your owner developer is going to need from you, and just make sure you're doing what you have to do. So we'll support our partners, whether they're global or local, but we'll also have certain expectations. And I'm sure, based on what I've seen, everyone on this call would be able to meet those.
Yeah, I'd say yes to all to that. And we did have a very similar bill to yours, where we were a smaller outfit, brought us a piece of land, and we brought a financial partner into the mix, which we do, depending probably about 90% of the time on our speculative products, maybe even 95. And that team, phenomenal at land, did not have a leasing branch. They didn't. Where we have been able to help bridge that is if the smaller outfit is willing to partner with another team to supplement their team. That has worked very well for us in the past because that local knowledge is so critical. And then I love to have a brokerage team on soup to nuts if we can do it. The continuity is great.
Right.
I see the other question. Anyone can get financing on a good deal. Now, what about financing on a spec development? Where are those coming from, right? Well, God bless Phoenix and California, who has helped us, really increase the appetite for people investing in speculative industrial in Arizona, New Mexico, like the Nevada area. And so spec industrial may be a little bit of cheating, right? Because we have been pretty fortunate to have numerous partners be interested in the majority of our deals. Last year, we closed four spec industrial land plays and started construction on them, all in that greater Phoenix metro area. We have 3 different partners. One partner did team up on both. So you have to look, and you have to really make sure you're using your connections through brokers and then through your company to find that right partner, because there are people out that are looking for just a little bit of everything. I see, again, selfishly, and I know we've been fortunate in that Southwest, so we've had a better go at it than, frankly, our friends in the Northwest.
Got it. Philip, how about you? How about funding for spec deals? What do you see?
Yeah, I would say even when I'd say top tier pension funds decided to slow down for a moment, usually they were first in line on all our deals. So it was a simple, we had a deal, we had 10 people chasing us for a deal. And we had the really kind of the pick of the litter. And then it became, hey, we have to go look for capital. And it has always been available. And sometimes what happens is the terms change, right? We may not get the same promote structure that we once had. And it may not be the ideal capital partner that we've had a lot of experience with. So once we have that experience, we build that relationship, then they become a top tier for us as well. They're going to become our go-to. So we've had a few of those examples, but for the most part, right now, our top tier capital providers are ready to go.
Wow,
In
that's
most markets, just ready to go.
So what we'll do, John, I'm going to have you answer the same question about financing on spec deals. And then after you wrap up, we'll turn this back over to Jonathan. I want to respect everybody's time. We're getting the top of the hour. And so, John, do you want to tell us a little bit about financing of spec deals from your perspective?
Well, from my perspective, Dermody has been laser focused on best-in-class facilities and hard-to-find locations. And when you have that combination, you're always going to have a viable project. And I would just say to everybody on this call, one of the great advantages you have is that those locations, you know them as well as anybody else. And I would just suggest that if you're going to spend your time trying to bring opportunities to developers or acquisitions to owners, that find those great sites and those great locations in your markets, and the odds of success will be a lot greater.
Great. Great. Thank you, John. Thank you, Philip. Thank you, Molly. With that, I think we'll conclude this panel discussion, and I'll turn this back over to one of the CORFAC leadership, whether that be Jonathan or Jennifer or Diane.
I've got nothing to add. Thanks again, Molly, John, Philip, Tom. Great exchange, great conversation. And Molly, I will be calling you soon. But thank you all very much, and hope to see you soon on another Zoom call in Amsterdam, wherever. And thanks for being part of CORFAC. Couldn't do it without you.
Great.
Thanks.
Thank you.
Talk to you soon.
Doing it.
Bye-bye.
Thank you. Bye.
Thanks.